senior lender managing the banker's commercial portfolio and serves on Office of Loan Committee. Campbell has over 18 years of experience in the banking industry, working for Trustmark and Citizens National Bank in addition to FNB Oxford. He graduated from Ole Miss with a Bachelor of Arts in Journalism and Public Relations and is also a graduate of the Graduate School of Banking at LSU. Currently, he serves on the Education Committee for the Mississippi Bankers Association, is a member of the Lafayette Oxford Foundation for Tomorrow, and is finance chairman of St. John's Catholic Church, as well as a parish council member. Campbell and his wife, Suzanne, have two daughters, Patton and Collins, and a 92-pound lab dog named Gus. Without further ado, ladies and gentlemen, Mr. Campbell Helveston.
Thank you so much. Thank you. Yeah. Could not have a complete resume without the 92-pound lap dog named Gus. So, all right, I've been cleared to take this off since we have no one in the splash zone, which Alexis, I'll be stealing that one from you. Thank you for the introduction. And yeah, that is kind of me in a nutshell. Again, Campbell Helveston, better known as Suzanne's lesser half. So I want to keep this very, informal. I know y'all are taking time out of your day. This is a voluntary event, so I want it to be beneficial for y'all. So I'm going to give you just a little rundown, and then I want to open the floor for questions. Ask me anything you would like. If I answer something you don't think is correct, call me out on it, and we'll be glad to talk it through. So I want to learn from y'all as well today, because y'all's generation, y'all have, are experiencing things that, no other generation has before you. I mean, y'all are coming through, in the midst of a pandemic, graduating, getting ready to go out into the real world. So, y'all have a totally different mindset than what I did when I first joined the workforce. So I'm here to learn from y'all just as much as y'all from me. So again, 18 years in banking, which that number kind of scared me when Suzanne first asked, how many years have you been doing this? When I graduated college, which was back in 2002, my degree was in journalism with an emphasis in public relations, minor in English. So how I got in banking is kind of an interesting story, and I'll give you a little brief rundown with that. Got out in 2002 with the mindset of I'll be a young executive for a great PR firm. But economic times were not the best when we did graduate. 9/11 had happened the previous fall, so the economy was in a downturn. Jobs were scarce, so it was a little cumbersome getting out into the workforce, trying to find that first job. So mainly, and Suzanne was in the same boat with me. We were, you just kind of got whatever job you could get at the time. So luckily, my first job offer came in Meridian, which is where Suzanne and I had moved to right out of school. Was the newest sales representative for Icon Office Solutions. I sold copiers and fax machines door to door for Lauderdale County and the surrounding areas. So to say that was not my top pick of jobs coming out of school is a pretty good understatement. But it was rough. It was totally out of my box, going door to door in a community where I didn't really know anybody. But probably the best first job I could have had. It challenged me. It put me in business settings that I wasn't used to. It got me out of my box of being able to talk to folks about copy machines, which if you've ever had to deal with one, that's not something that folks are just readily opening the doors of, yes, we would love to buy one of these, because usually they're just mad because theirs isn't working, or we've already got one, we don't need to talk to you. Thank you for stopping by. Did that for about a year. And then a friend of mine moved to Meridian with Wells Fargo. He called me up and said, look, I need somebody to come on board with me. I know your background is not in banking, but would you come over and give it a try? Sure, yes, I've sold enough copiers, I can move on. So again, background in journalism, English, your liberal arts major. I did not really know what I was getting myself into in banking. So did what I could, got on Amazon, started ordering books, trying to educate myself from a credit analysis standpoint, banking and finance. So knew just enough to be dangerous coming into Wells Fargo. Was with them for a short while before Union Planters, which was a Mississippi-based bank that has since been acquired by Regions, they were gobbled up a couple of times. So, but they recruited me over to manage one of their smaller branches there in Meridian. So I was in on the retail side, great experience, very good from a customer relations standpoint and dealing with folks on a day-to-day basis on that front, before getting into what I primarily do now, which is the commercial lending side. So as you mentioned, I was with Trustmark and Citizens National Bank, which is a local bank in Meridian. We were there nearly 14 years, had really established things down there, loving life. Had taken a random trip up here to Oxford for a weekend, and I bumped into Johnny Barrett, who's the CEO of FNB Oxford Bank, at Big Bad Breakfast one morning. Johnny and I had been in communication for years, just kind of how do you do, and just keeping tabs on one another. And he said, "I've got a job opening. Would you like to move to Oxford?" It was interesting conversation with Suzanne after that, but it was a great one, great decision that we made. We've been here 6 years now. FNB, I've been with them the entire time we've lived in Oxford. We are a small community bank. We have total assets of $447 million, total loans of around $223 million, and total deposits of about $354 million. So, very small when comparing to the Bank of America's or local Trustmark's Regions. But it's been a fantastic fit. It's something that I love doing because I'm able to really, I'm not removed from the public. I'm still at the front line. That's something that's always been near and dear to my heart. I don't want to be, 6 floors up and away from dealing with folks. That's just, I think I would drive myself insane if I couldn't at least interact with folks. So that's been a big adjustment for me with the pandemic. Is I've loved going out and seeing folks. I love talking to folks. I love dealing with them face to face. Zoom and the phone, we don't mix very well, but it's a necessary evil these days, and we've made the most of it. So I've adjusted, and that's basically my story. So that's a little background on me. Again, what I primarily do is commercial lending, but I also manage some of the retail staff and some of the other lenders in the bank. It is small bank, as I said, so with that, you wear a lot of different hats. So I'm doing everything from, helping make decisions for multi-million-dollar deals to, Freddie, our go-to maintenance guy, when he needs help throwing shred out the back window, I go help him do that. So I've kind of got a little bit of experience everywhere in between. So, I'm here, I want to benefit y'all as much as I can. So any questions y'all have got right now, and it can be from a credit standpoint, from any bank question you've got, you are ready to roll. So we're going to let you go first.
I don't know. I was just getting your opinion. You mentioned how it's kind of hard to find a job right when you
Yes, ma'am.
graduated because of 9/11. Do you think the pandemic will also be similar to that?
That's a great question. No, that's a fantastic question, man. Out the gate. Being honest, I would say my opinion, it is going to be more difficult because a lot of companies, they're starting to see that they can work smaller. They can, have folks work from home. They don't necessarily have to have, folks in office to get certain duties done. And again, with things being tight, folks have had to learn to operate, with a very thin staff. Now, that being said, there are always going to be opportunities out there for you. And it's not necessarily, that first opportunity may not be your dream job, selling copiers. So my recommendation there is, and advice I'd always gotten when I was first coming out of school, is it's always easier to get a job when you have a job. So you may not be able to, jump into that dream job that you want right away. You do have to cut your teeth in certain areas, and you may have to take that job that you may not necessarily want, but you'll gain good experience, you make the most of it, and hopefully it should parlay into other opportunities. But it'll definitely be something that I think y'all will face. But what I would recommend is persistence there. Make yourself stand out. Thank you notes go a long way. It's a lost art, I think. You don't see as many of them. So if you do get that interview, a handwritten thank you note, okay, well, she took the time and effort to come do this. Thank us for our time. Let's give her another look. So, little ways to make yourself stand out will always go a long way. So. Any banking questions? Yes, ma'am. Yes, ma'am. Sure.
But I don't have a credit card.
Mm-hmm.
Because I've heard horror stories about them, but also everyone's like, but you need to have credit. Should I get a credit card?
That's
and how do I save up for it?
Sure. No, all great questions. And that's I kind of focused in on some of these. Building credit, we'll start there. That's one of those chicken or the egg things too, because it's a lot of times when you're applying for credit, folks are like, well, I'm sorry, you don't have any credit history, so we can't do this. And you're like, I'm trying to establish it, so help me help you. There are a lot of ways that you can do that. Credit cards is one. Credit cards are one of those things. It's a great credit building tool, but I get the fear of it because that swipe is so easy, and you glance up and you look. I didn't realize I'd spent $1,200, already, and now I've got this balance I've got to deal with, and I don't want that to just steadily grow and snowball. So let me backtrack. We'll get into credit cards in just a second, but establishing credit, that is a good way to get started. Another way to do it that I recommend for a lot of folks when they come see me, when they're just trying to build credit, they may not necessarily have, a car in mind, or they, don't have anything, on the horizon that they're shooting for. They're just like, I know I'm going to need it, so I want something to help me build it. What I do a lot is I make them a loan for $2,000, just an arbitrary number that I throw out there. And I take that money and I put it into a CD. So a CD is a certificate of deposit. It's a bank product that we pay you a little bit of interest for you to keep that in our bank. I secure that loan with that CD that I've created from my loan proceeds. I establish a timeline of, let's just say, 24 months or whatever loan payment that they're going to be able to work with and feel comfortable with moving forward. Because establishing credit is not just a let me borrow money, pay you right back, and bam, I'm perfect now. You've got to show it over time, because that's what the credit bureaus are looking at. They want to see that, okay, you've had this 24-month term to pay the loan back. All right, looking at it, it was issued on this date. She paid it off in 18 months. Okay, well, let's tick her score up. She's looking good on that. So that is a great way to establish credit. I like doing that for a lot of folks in that particular circumstance, because once they pay it off, then I basically get to turn around and say, here's the CD. You've now got $2,000 that you've established credit. You've got your $2,000. In your case, all right, this is money I can use to put down towards a car, and it's just a good way. You're not coming out ahead interest-wise, because your loan is going to be charged more than what you're earning on the CD, but what you get from it, there is value in it, where you've established that credit, and you get a little carrot at the end of the rainbow, so to speak. So, credit cards, and then I'm gonna come back around to you on the car thing too. So, credit cards, again, that's I've seen that get really out of hand, because that thing is so easy to swipe. It's mindless. You don't think about it. All I can say is be extremely cautious with it. There are so many tools out there that banks do offer, from the app on your mobile device, online banking. You can keep tabs where those balances are, how your payments are structured. If you feel like, okay, that balance is getting a little high, I need to scale back because I got a payment coming in 2 weeks, and I need to make sure that I've got enough to pay it off. And whenever available, try to pay it down to zero every month, so you're not charged that interest. So that's my advice on credit cards. Yes, ma'am. Yes, ma'am.
So I have a credit card right now. Currently, it's not in position because I gave it to somebody who's supposed to keep it on me. And I will say, when you pay off your credit card, it'll shoot, like the first few times, it'll shoot your score up. because the first time I paid off my credit card bill, I was owing like 24.
That's great.
And that was a small bill, and I paid another bill with like another, like, maybe 7. And then just recently, I had a very big bill that I had to pay off, and my score shot up 58 points.
Oh, wow.
It was horrible.
Well, but you're moving in the right direction though. So it sounds like you're.
And advice, well, this is advice that was given to me about loans.
Sure.
I don't know if maybe you can attest to it.
Yes, ma'am.
Like, if you're getting a loan just to get a loan to build credit, instead of spending the money within your savings account on the drive when you need it, and use the money that you took the loan out for to pay the loan.
That's a great thing to do. Yeah, it's very similar to the example I gave of, you setting that in the CD, but the difference there, yeah, that's the CD money you can't touch. That's just kind of your carrot at the end of the term. But that's a great way to do it as well. So if you've got those funds, you set those aside, put them in your savings account, and use that to pay back the debt to build up credit. So yeah, definitely another very good example on that. Kind of piggybacking on that with credit card debt and with how that kind of correlates to your credit score is a lot of things that they will take into account. The credit bureaus will take, or the credit bureau companies will take into account is the amount of credit you've been given. So let's say FNB gives you a credit card of $5,000, and like you said, you had Christmas on there and got that balance up a little bit, but have now paid it off. Well, they recognize that, all right, while FNB has given a $5,000 credit limit, you're only using a certain portion of that. Let's just say you'd only used a $500 balance of that, or you've paid it down to zero. So the availability of credit, that also plays into your score and keeping that up. So again, as you're starting to obtain credit, the more that you're able to get and show that you're not necessarily using it or using it very wisely, that's a definite factor into how your score can go up or down if you're mishandling. Yes, ma'am.
Okay, so this is another question. Do you recommend, like, when you get a car going to the federal credit union to get that all instead of giving it to the dealership?
I would recommend using who you are comfortable using, who you recommend. I won't say don't go through the dealership, because sometimes there are offers that they have in place that banks aren't going to be able to touch. What I do want to warn, I don't think this happens quite as much anymore, but I do know that the nightmare story of somebody I had to help out when we lived in Meridian. They went to dealership one day, and the dealership, this was not a A++ rated dealership, found a car that they liked and said, they said, do you mind if we run your credit? We may send this out to a couple of different institutions to see if we can get you the best deal possible. Well, my customer and friend, not knowing at the time, that could have been a bad thing, they said, yeah, go ahead and do it. Well, they shot the information out on my customer, ran her credit, I think 10 different entities, something like that, and those inquiries just eat into, that's a bad thing. That's showing dings. People are checking out your credit. It's showing that you're going to multiple places trying to get that credit issued to you. Well, that kind of freaks out the credit bureaus, so that score just steadily starts creeping down. So that's a question that you do ask the dealership when you go in. You say, okay, how will you be pulling my credit? Is this going to be just your department pulling my credit? And get confirmation with that it's just being pulled one time. As far as the credit unions or a bank, you can always call and just say, look, I'm looking to borrow X. I've got my eye on a 2019 Dodge Ram. Here's about how much I want to finance. What are your rates going for that? And a lot of times they'll say, well, I can't quote you a rate without pulling credit. And my standard line would be, well, assume that I'm 700 plus. Give me just a range. I won't hold you to the quote. I'm just trying to see where I want to do this. And it's okay to shop that, to kind of see what is the best deal out there. And I hope I'm answering some of your questions back on car. Okay, very good. But again, borrowing money, and this is kind of my spiel that I give to a lot of folks. I don't always have the best interest rates. I don't always have, the best term out there. They're easily, particularly with car loans, a dealership is probably going to beat me 99 times out of 100. But a lot of folks, they like dealing with Campbell. They like dealing with me. They know that they can get me on my cell phone. They know that I'm not going to take advantage of them in any way. There's a lot of value in that. Whereas, so that would be my advice. If you've got somebody that you know and trust, whether they work for, credit union, bank, if you've got an established relationship with them and you know that they're, a good person, they're going to steer you in the right direction, almost as a financial advisor. And I can't tell you how many loans I've turned away by saying, I would love to do this for you. I'll do it for you all day long, but I think you can get a better deal over here. And with that, they know that I'm taking care of them, and I know that they're going to stick with me as a customer through thick and thin. So that would be my advice on shopping, where to borrow money to buy a car. Yes, ma'am.
Now, I would like advice on what to do about, let's say, I want to buy a home.
Buy a home?
Yes.
Yeah.
And I'm looking at probably a 30-year mortgage rate, probably, because I was thinking about buying a home out of grad school,
Sure.
Indiana,
Mhm.
or Texas. So what advice would you give, like, when looking for, loans or mortgages for homes with like really good like interest rates and whatnot?
Sure. The good thing with mortgage companies and mortgage rates is they're going to be pretty consistent from bank to bank. That's something that is heavily regulated in the country. So a lot of folks are really having to adhere to, specific guidelines and federal regulations that are put forth. So that again kind of falls back to that relationship. If you've got somebody, that or somebody that you've dealt with in the past, it's all about your preference on that of, I like dealing with him. I know he's going to take care of me, or she's never steered me wrong, and I know she works for a good company. In the event you don't have, a connection, let's say that, you're moving to a new city, new spot, and trying to figure that out, I'd ask, people you work with, say, in the market to buy a home, would you have any recommendations of somebody that, would be a good fit for me? And a lot of times word of mouth recommendations are a lot better than anything you can learn online or, anything of that nature. Now, as far as buying the house, you'll definitely want to check with the lending institution to see what their down payment requirement's going to be. So if it's, 15%, 12%, 10%, you kind of know going into it, okay, I've been able to, put a little bit of money back. I've got a nest egg saved over here. I know that I'm going to need that. And this is going to be my ballpark range of where I can buy a house. Does that make sense? So if I know that, I've got, just for round figures, want to buy a house that's going to cost $100,000. The mortgage company I'm going to deal with, they require at least a 10% down payment. Okay, well, I know I've got to save $10,000 in order to be in the game, and I've also got to account for fees. I got to account for any closing costs that are involved that I may have to cover that are involved with that. And your mortgage originator or banker at that point, they can walk you through, here's the fee structure, here's what's going to, what you're going to have to be responsible for in addition to just the down payment into it. So it's not just that 10%. That's going to be a clean cut number. You've also got those other expenses you got to be prepared for in that event. Down payments, that's another thing that a lot of mortgage companies are going to, the more you're able to put down, typically the better deal they're going to be able to give you. It's if you've got 25% that you're able to put into a deal like that, then they're like, okay, well, they get the preferred rate. And the reason you get a preferred rate is the more money that, from the bank's perspective, the mortgage company's perspective, the more money that the person has into the deal, the less risk that they have. So they're able to justify, okay, I can get a lower return because my risk on this is a lot lower. The adverse effect of that is they don't have quite as much money in that. So that rate level is going to be tiered a little higher because, again, the risk has gone up for the lending institution. we gotta watch from that standpoint of, what's going to happen if this thing does go bad. So that answers some of those questions for you. Yes, sir.
So for commercial lending, so someone's coming to you and they're like an entrepreneur and they just finished grad school and they're in debt, like they just have an idea. How are you clearing them, or how can you even give them a loan? Like, what are the options there? Like, if he has no income, he has already had debt from grad school, and he's trying to start a business.
I'll say that's tough. And it's a tough spot to be in for traditional lending. It's a great question. I'm glad you asked that, because I did have that covered, because I figured we've got a few future entrepreneurs in here that are going to have, these great ideas, great business, aspirations, and you're sitting on go, and I know this is $1 million idea. I know it's going to work, but the bank's going to look at it. Okay, well, you're just out of school. You've got no other sources of income. This isn't a proven venture yet. We don't know that this is going to work. You've got great ideas. You've got a fantastic business plan. You're a great guy. I like you, but I need a track record, because that's a lot of what we base on if we're going to get paid back is, a borrower's history. We look at tax returns. We look at, their sources of income, how they're able to repay that debt. Now, that being said, there are a lot of federal and state agencies that are out there that have products in place. And this is where I steer a lot of these folks whenever they do come to those ideas, or come with me with those ideas. There are, ways that through grants and, whatever programs that they've got, there are certain things that they can do and put these entrepreneurs in place, or at least assist the bank in lowering some of the risk with it, to allow those ideas to come to fruition. So there are avenues out there. From my standpoint, a traditional banking standpoint, I'll shoot you straight. That's going to be a tough loan for me to make, because I've got really nothing to base it on at that point.
And it's a proven business model.
Yes.
And it's like there are lots of examples of
Yes. Dental practice, that's totally different, because you will have put in the time in dental school. You will be armed with your degree. You will be armed with the doctor in front of your name. So that banks are more willing to, I guess, go that direction and help a young dentist get off his feet, buy into a practice, or get established, because the track record is there. We have been able to see when new folks come to town getting started, because they do have the medical background. They've got all the tools that they need. They just need the patience at that point. So yeah, in that case, the model is there. So you would be in good shape, I think.
Kind of a follow-up.
Yes, ma'am.
So say you're coming out of medical school with like hundreds of thousands of dollars in debt, for example, would you be able to purchase a house during residency, or would you not be able to take out a loan having that much debt?
It's a good question. A lot of times, and I know just enough about this to be dangerous, so I'll give you my best answer with this. In that situation, a lot of times when doctors are, first coming out, that can be a package thing that they, with whatever hospital or whatever, group that they get on with, where it's either, some of or all of that student debt is wiped out as part of the deal. So, a bank is going to have that in mind as well. FNB does not personally have one. I know that other banks in some of the bigger medical hubs, like Tupelo, Hattiesburg, they've got specific doctor programs. And I think you would be able to find one in just about any state in the country where there is a doctor program that would outline a lot of the benefits, what you'd be allowed to do, and good directions to go from a financial standpoint, because it's a great program to have because you want to be the one who helps that doctor out to, get on their feet, to, they want her to remember, all right, we were there on the very front end, so we want you with us a long time. So again, a lot of programs out there, and there's a lot of ability for somebody, looking in those directions. Yes, ma'am.
Okay, so, I wanna know, like, with banking, like, I know, like, the standards of buying a home in the US, with all of our, like, credit bureaus and things like that. Let's say I wanna own property, like, maybe internationally,
Mhm.
like, maybe like in another country.
Mhm.
Would the, like, bank in the US be able to, like, help with that process as well?
That's a good question. I'm sure there are some out there that do. There would probably be more that would not, because that's, again, this is going to be on a much smaller scale, but like with FNB Oxford, our presence, we're only in Oxford and Tupelo. So we know North Mississippi pretty well. We really don't like getting into outside of markets that we don't know. So it's, unless it's a, good existing customer who, is wanting to buy a vacation home over in, down in Florida. If we know the customer, we don't really know that Florida market well, but, we like this guy, we want him to stay with us, so we're going to do that deal. Outside of the country, it again depends on where you're going to be, because totally different, laws, regulations, and everything that you're getting from an international standpoint. There aren't going to be a lot of banks out there that probably would understand and feel comfortable making that purchase. There are some out there, but probably fewer than those that would not. So, a little different scenario with that. Yes, sir.
Do you know if there's any difference in terms of having a savings account and a credit union or just a regional bank? Are there any differences in interest rates and things like that?
Yeah. Sure. No, very good question. It's, a lot of that is going to be dependent upon the banks. I'll give you more information than you're probably going to want on this, but a lot of it will depend on the bank's capital position and cash that they have available on hand, because it's how banks work. As I mentioned, we've got, $354 million in total deposits. Those deposits that we make, that's what we turn around and essentially loan out for loans. So that's where, banks' profit margins, that's how we create our spread. FNB, we're very blessed and are in a good position where we do have that good deposit base and a good capital position where, adversely, the demand for deposits are not as great. So therefore, and again, I'll put all my cards on the table with y'all. Our savings rates aren't as high as some others. You look at other banks, they may be, we need to grow this, we're needing, some deposits. They may be offering a little, preferential interest rate, or, if you can get us to X number of dollars, this will juice your rate up to this. So as far as, whether it be credit unions, a bank, all of it's going to be a little different. Not a huge difference, but again, I go back to banking with somebody that you know and trust. If it's somebody that that they're going to take care of you, you may not always get the best interest rate from a borrowing standpoint or from a savings standpoint. But again, if you know that they're going to take care of you, they work for a credible institution that is not going to poof, your money is just gone one day. An FDIC insured bank, that way that your money is safe in there. That's the main thing. Savings accounts, these days in this rate environment, they're not paying a whole lot of interest on them. That's just kind of the rate environment that we're in. But, as economies turn and things start to tick up, you can see that increase a little bit and earn a little more interest along the way. That answer your question? Good deal. Yes, ma'am. Yeah. Sure thing. No. And this is something that I continue to look for on how I can do this. So the best advice I can give you on that is there are so many tools out there from the app on your phone to online banking. You're able to move money from a checking account into a savings account, when you see that you can. The best advice and the best way to do this is with your paycheck that you get. Let's just say that you're on a regular biweekly paycheck. Have money direct deposited into that savings account where you're just not even have to manually push that in there, whether it be $5 or $250. Put a little bit back just when you can, and if you can do that again from the auto draft or the direct deposit, where it's not even going into your checking account, that's just money you're not even missing. You just go ahead and mentally block that is earmarked for this, or I'm trying not to touch this unless I have a break the glass emergency. That's a good way to do it. Saving early and often, that would be the best advice, and try to do it in a manner where you don't even feel it. On that front, something that Suzanne had touched on when she was emailing me about some topics to cover with y'all. 401k, as you get out into the workforce, participate in your company's 401k as early as you possibly can, because that is money. It's essentially free money that they're giving you for retirement. A lot of folks, when they're first getting out, you look at it of, my paycheck is only X. I've got to live, I've got bills to pay, I've got to do all this stuff. I'll participate next year. Even the smallest amount that you can do, get involved in that. Try to get at least up to where that company match. A lot of employers are going to offer, a 2% match or a 3% match of whatever you put in. Try to get to that, because in the long run, when you look up and you're already ready to retire, you look back and be like, I'm so glad I started doing that at 23. I'm glad I didn't wait till I was 35 when I thought I'd be able to, catch up, because that's the time value of money that you're able to, if even just a small amount put in early on, that's going to compound that interest over time and really be beneficial to you in the long run. So that is, from a savings standpoint, number one advice: take advantage of that company 401k, because, like I said, it's free money. Yes, ma'am. Sorry, he shut up. I'll get to you next. Yes, ma'am. No. You're asking good questions, so you're keeping me on my toes up here.
I was going to say, let's say I want to start like an investment savings account. Do you have any advice on that?
So an investment savings account for like a portfolio investment, like buying stocks and or just like an investment account of, I'm saving this nest egg over here to invest in, a house, or, more like that. Okay. Yeah, there are, again, the bank products are pretty simple on that front. There are, your standard savings accounts, money market accounts that have a little higher interest that you're able to earn. Earmarking that money and trying to get it in that account without it ever hitting your checking account is still, I think one of the best saving tools that you can do. Like with your paycheck, just go ahead and say, I want, when I'm setting this up, I want, 85% to go into my checking, and I want 15% of this to automatically go into this savings account over here, because I know I'm going to need it at some point. Get it going, start building it, and don't touch it unless you absolutely have to. From an investment standpoint, a little different. Like if you are wanting to look at, stocks, bonds, and things of that nature, this is not in my wheelhouse. So I'll just give you what I know as a just novice investor. There are different products out there like Stash. That's an online app that you have. I've got it. They do a pretty good job of trying to educate you on there of, when you start zeroing in on a certain stock. I know that when I was buying, it was saying, all right, you're starting to get a little heavy in this particular avenue. You probably want to diversify it a little bit. So another thing with savings is you don't want to have all your eggs in one basket. You do want to, from a just overall look, want to diversify how you've invested, how you're saving, because you want it fair and balanced. So if there's one area that, may not be doing quite as well, may not be earning quite as much, hopefully this other area is do it better. Like let's just say you've got 3 different stocks. I've got one in, this healthcare related, one that's real estate driven, and another that is for innovation, whatever. And in certain economies, that innovation account is going to be rocketing, it's going to be great, where real estate may not be doing quite as well, but then the returns, and we see real estate start to climb up. That value is getting a little higher while innovation may be going down. I'm protecting myself because I've diversified and spread my investment out over different sources and different types of stocks. So, yes, sir. Yes, sir.
Thank you. Kind of answered it with that, but just tangentially talking about stocks, when it comes to investing, do you think it's more prudent to invest in things like dividend-paying back stocks, or is it, especially right now how turbulent the market is, if it's almost smarter to play the game and try to find those like meme stocks that are going to be going up and then find ones that are high?
Good question. And my advice, personal advice, because again, I'm not, that's totally outside of my box. I'm giving you what Campbell individually would tell you versus.
I think we've covered a lot with building credit, savings, 401k, budgeting. Any questions about, I guess, how to apply for a loan, or any additional questions about how credit works or anything like that? Yes,
Not
sir.
really related to credit, but I guess in the banking industry where you are, you feel that it's a pretty static environment, or you feel there's a lot of opportunity to improve your position, move up to more executive, like CEO, things like that?
Excellent question. I think there's a lot of opportunity in the banking industry, which is kind of the reason I stuck in it. When early on in my banking career, I looked around the room and I saw a lot of gray hair. I saw that the age gap, there was a pretty significant one. This is when I was back in my early 30s. I'm looking around and I see, all right, my boss is 60 plus. There's not really anybody in between me and him. And I mean, you look at that, the banking industry across the board, there's a pretty good gap. So I think there is a lot of opportunity for folks to get in and have the ability to move up. At the end of the day, you're responsible for yourself, your family, those that you want to take care of. So I know I drove Suzanne crazy with made multiple banking moves in order to kind of position myself to allow myself to move into some spots, probably a little quicker than I would have if I'd stayed in one spot. On that front, I never made a move. Very early on, I found two excellent mentors that I never made a move without talking to in depth with them first. I would weigh the pros and cons with them, I'd get their advice, and there were multiple jobs that I was offered that I said, you know what, after talking through, this just doesn't sound like a good fit. That's going to be a dead end. I'm going to end up staying. It's going to be a lateral move for me. I mean, to this day, my former boss, Billy Estes, he's been retired from banking for nearly 10 years now, and I still call him probably every 3 or 4 months to bounce ideas off of him, talk through things, and he's just a good person to get advice from. So that's, again, something that I recommend, whatever field that you do get into, find that person that, would be willing to take you under their wing, to give you good advice, somebody who has been through things and can talk through and help you make those good decisions and what's going to be best for you. Yes, sir. Yes, sir. Got a little off of the direct question that you had asked, but I do think, that's a great thing to look at when you are getting into the workforce is what opportunities do I have for advancement? Who is going to be in front of me and when will they be leaving? Any other questions? If not, again, thank y'all for being here. I know this was a voluntary event. I hope y'all did take something from it. I haven't answered some questions that would be helpful. If y'all are like me, I always think of a question 2 days later after I've gotten away and I can't answer it anymore. So I'm gonna leave some call here. Y'all please feel free, call me, email me if you do have questions that come up in the future. I'll be glad to answer them or bounce ideas off. If you've got the next big entrepreneurial dental practice that you're ready to do, we can we'll see what we can do on that. But y'all have been great. Appreciate the questions and thank y'all so much for your time.